Everyone talks about making more money, but nobody talks about what actually changes when you do. Not the cars, not the houses, not the vacations, the real stuff. How you think, how you sleep, how you make decisions, how the world treats you differently depending on the number on your pay stub. This is your life at every level of income, and some of what changes might surprise you. Level 1, 0 to $25,000. You're not living, you're surviving. At this income level, every single dollar has a job before it arrives. Rent, utilities, groceries, transportation. There is no budget because there is nothing left to budget. The money comes in, and it's already gone. You make decisions most people never have to think about. Do you fill the tank all the way, or just enough to get to work this week? Do you buy the name brand or the store brand? Do you go to the doctor or wait and hope it goes away? The psychological weight of this level is something people who haven't lived it fundamentally don't understand. It's not just about money, it's about mental bandwidth. Every financial decision, no matter how small, requires calculation, and that constant calculation is exhausting in a way that compounds over time. Here's what most people don't know about this income level. It's not laziness that keeps people here. It's math. A single unexpected expense, a car repair, a medical bill, a broken phone, can set someone back months. There is no buffer. There is no margin for error. The trap at this level isn't spending too much. It's that there isn't enough to begin with. But here's what this level teaches you that no other level can: resourcefulness, prioritization, the ability to make something out of almost nothing. The people who escape this level and build real wealth almost always credit the discipline they developed here. It costs everything, but it teaches you everything too. Level 2, $50,000 to $100,000. Something shifts at this level that's hard to describe until you feel it. You're not rich, not even close, but for the first time in your life, you have margin. Margin means when something breaks, you can fix it without panicking. Margin means you can say yes to something without saying no to something else. Margin means you can think about next month instead of just surviving this one. At $50,000, you start making choices instead of just reactions. And that's where it gets dangerous. Because lifestyle creep is the silent killer of this income level. The raise comes in, and suddenly the apartment gets bigger, the car gets newer, the dinners get nicer, and before you know it, you're making $70,000 and feeling exactly as financially stressed as you did at $35,000. This is the level where the wealth gap is actually created, not between the rich and the poor, between the people who treat the extra income as an opportunity to build and the people who treat it as permission to spend. The person who earns $60,000 and invests $1,000 a month is building something that will compound for decades. The person who earns $60,000 and upgrades their lifestyle to match it is running a treadmill that never stops. At this level, your habits matter more than your income, because your habits determine whether the next level feels like freedom or just an upgraded version of the same trap. Level 3, $100,000 to $250,000. Six figures. It's the number everyone chases, the benchmark people set in their 20s and spend their 30s working toward. And when you finally get there, when the offer letter comes in and the salary starts with a 1, something interesting happens. It doesn't feel the way you thought it would. Not because 100,000 isn't good money. It is. But because your expectations grew right alongside your income. The lifestyle you built on $70,000 costs more than you remembered. The taxes hit differently. The 401k contributions, the health insurance, the student loans that followed you here. By the time everything comes out, you're taking home maybe $5,500 to $6,500 a month depending on where you live, which is genuinely comfortable, but it's not life-changing. Not yet. Here's what this level actually gives you that the previous ones didn't: optionality. At $100,000, you can make real choices. You can max out your retirement accounts and still live well. You can save for a house and still travel once a year. You can build an investment portfolio and still go out on the weekends. The trap at this level isn't money, it's ego. Because $100,000 comes with a lifestyle identity: the nice apartment, the car that reflects success, the dinners and the trips, and the image of someone who has made it. And maintaining that identity costs more than most people at this level realize they're paying. The people who build real wealth at this income level are the ones who live like they're still making $70,000 and invest the difference. They're not impressive at dinner parties, but they're building something that will outlast every expensive meal their peers are buying. Level 4, $250,000 to $500,000. Welcome to the level where your biggest expense is no longer rent, it's taxes. At $250,000, you are firmly in the top 5% of earners in America, and the IRS knows it. Your marginal federal tax rate is 32 to 35%. Add state income tax depending on where you live. California takes another 9.3% at this level, New York close behind. By the time everything is accounted for, you could be sending 40 to 45 cents of every dollar you earn to various levels of government. This is the level where the game changes completely. You stop thinking about how to make more money and start thinking how to keep more of it. Tax strategy becomes as important as income strategy. Maxing out every tax advantaged account, 401k, HSA, backdoor Roth IRA, business deductions if you have any self-employment income, real estate depreciation, charitable giving strategies. At this level, you need a CPA, not a tax software, a real human being who understands your situation and is actively looking for ways to reduce your liability. But here's the other thing that changes at this income level that nobody talks about: the relationships. People start treating you differently when your income reaches this range, and not always in ways that feel good. Some friendships quietly shift. Family dynamics change. People assume things about you. People ask things of you. The social dynamics of wealth at this level are complicated and often isolating in ways that catch people completely off guard. Money at this level buys freedom, but it also costs you something in ways that are harder to measure. Level 5, $500,000 to $1 million. At this income level, something fundamental changes in how you relate to money. You stop worrying about it, not in a careless way, in a structural way. At $500,000 a year, your basic needs, housing, food, transportation, healthcare, represent a tiny fraction of your income. The anxiety that defined level 1, the discipline required at level 2, the ego management of level 3, none of that applies here in the same way. You have a team now, an accountant, a financial advisor, possibly an attorney, people whose entire job is to optimize your financial life so you don't have to think about it. Your money is making money. At this income level, if you've been building correctly since level 2, your investment returns alone could cover most people's annual salary. Compound interest at this scale is almost incomprehensible until you watch it happen in real time. But here's what this level reveals that lower income levels can't clearly see. Income is not the destination. It never was. The people at this level who feel truly free are the ones who converted their income into assets along the way, the ones who bought real estate, built investment portfolios, started businesses, because income can stop. Assets don't. A $700,000 salary disappears the moment you stop working. A $3 million investment portfolio keeps paying you whether you work or not. The smartest people at this level are quietly making themselves replaceable, building passive income streams that will outlast the job that funded them. Level 6, $1 million and above. At this level, income becomes almost an abstract concept. You're 45, you've built something, your annual income crosses 7 figures, and you realize almost immediately that the number itself doesn't matter anymore. Because at $1 million a year, you cannot spend it all, not on a lifestyle that most reasonable people would recognize as normal. What changes at this level isn't your lifestyle, it's your relationship with time. Time becomes the currency, not money. You have more money than you can meaningfully deploy into personal consumption. What you don't have, what nobody gets more of, is time. So you spend aggressively on things that buy it back. Private aviation, household staff, personal assistance, services that eliminate every friction point in your daily life so that every hour is yours to direct. The financial decisions at this level are almost entirely about preservation and legacy. How do you protect what you've built across market cycles, across generations, across tax environments that will change? Estate planning, trusts, family offices, philanthropic vehicles. And here's the thing that almost everyone at this income level will tell you when they're being honest: the happiness curve flattens. Research consistently shows that beyond a certain income threshold, somewhere around $100,000 to $200,000 depending on the study, additional income produces diminishing returns on day-to-day happiness. The problems don't disappear at $1 million, they just get more expensive. What actually matters, the relationships, the purpose, the sense that your work means something, those things don't scale with income. They have to be built separately, intentionally, often in spite of the money rather than because of it. The people at this level who seem genuinely content are almost never the ones who chase the number. They're the ones who built something they believed in and the money followed.